Alright, so I'm going to go ahead and get this video going. So Johanan, this is for you. This is just an overview of the Forex trading, what it is, what you can do, just real quick stuff, just to get the basics down real quick. So I'm just going to do the best I can to give you a general idea. Hold on. And I do apologize about the sound quality. This is just my gaming headset. There's nothing special about this. Also, I have someone here, and she's playing a game in the other room. Let's see. So first off, I'm using right now. I'm using a site called TradingView.com to sort of practice my strategies and such because my capital's not big enough right now to actually for me to be impressed with the profit. I mean, I could mess around with a little bit of money here and there, but I'm not really that interested in it. I'm gonna wait until I have a significant amount. I mean, a significant amount. I mean, like maybe $1,000 or $5,000 or something, which isn't really that much in the grand scheme. It's just enough to get you a decent amount of money on a monthly basis of about a 3% capital profit. That's what you would want to aim for while you're trading. If you aim for anything over that, you're leveraging your risk a little too high. All right, so this site, tradingview.com, is generally just kind of a practice site. It's where you would go to practice with fake money. And you can also use it to look at the market as well because it's the live market. I mean, you're not practicing on the fake market. You're practicing on the real market. So you would want to go to join for free, just set up an account. It is free. And if you want the pro mode, you can, but there's not a big difference. Just definitely don't get pro mode just yet because that's something you would want to get down the line when you have money already. It's just little perks for people who like it when they've really gotten into it and they understand the system. But anyway, I'm going to go ahead and sign in. It's already saved for me. So basically you'll come up to this page. It's just going to have market summaries. You basically can ignore all this. The first thing you want to do, oh, well, this right here, well, the first thing you usually do when you get here is you go to the chart. And I have two charts set up. I call this one the Euro US dollar. I should have just named it chart 1 or something because really it's not going to have just the Euro US dollar. So anyway, so here's where you have the chart. You have the flow of the currency in the history, just kind of here. On the side, I have these symbols set up myself. These are just kind of convenience settings, so that if I want to check out the Euro US dollar real quick, because I was on the GBP US dollar right there. So if I want to look at this, I just click on this and go to it, and there I am. Bam. If I want to go back to the GBP USD, I just click on it, and there I am. There's a lot of sites that do not have this kind of convenience. TradingView, this site is used by a lot of people. I mean, it's used by a majority of the traders to keep track of the market. As far as trading with TradingView, I don't think very many actually do. They use things like Oanda, and Oanda is what I use to actually trade real money. But I will watch this. I will use this site to watch the market, even though Oanda has its own charts. Anyways, you go here. Okay, see, that's the only bad thing about not having Pro. Those ads will pop up every now and then. That's fine. So when you're a trader, you usually come into the market and you have different ways of trading. I'm going to just give you a quick overview of the way I do it. So when I come here, the first thing I'll do, let's clear out everything. How do I clear out everything? Gosh, it's been a minute since I've used some of this stuff here, and they've updated a lot of things. Let's see. Well, that's fine. I'll just find a blank one. It doesn't matter which one. Here we go. I did some charting back then, but that's okay. So what I'll do is I'll notice a pattern, and you see all these highs and lows. And what I'll do is I'll chart support and resistance. I'll use this, and I'll do the horizontal line to plot where the support and resistance. It's kind of like you just kind of eyeball it, right? So you see that the market came up and it bounced right there and it made a stop down here somewhere. You could also put one there, but I'm not going to because I see an even bigger drop down to this line. We're going to call that support. And up here, we do have market broke, but then it came back down, hit support, and then bounced off of it again. So I would consider this line a much more important line that is much more respected by the market than, say, up here. So we have the market, people in the market that are respecting that line. That's the first thing I do when I get in here. Then the next thing I do is I look for what's called a pin bar. A pin bar is basically a rejection of the market. And so you see how on this side, I'm just gonna, let's see if I can use my, yeah, you see how I'm gonna move over one bar at a time. Let's start back here. So I see that the market was up there and I'm like, huh, interesting. And then it broke down and I'm like, wow, okay, so we're having more of a bearish market right now. And then the market will go down. Now it's kind of consolidating and now it's going down. Now it's hit the support right here, which actually is the resistance of this area. So maybe I'm going to find a pin bar there. No. Instead of a pin bar, we have what's called a bullish engulfing. That's where you have this bearish, which means the bar was going down. You have this bearish bar here, followed by a much larger bullish bar that kind of engulfs the bar before it. So that means that market sentiment has really shifted to a bullish market, at least in this daily bar. See, each one of these bars, according to my settings right now, represents one day. And you can change this, but since I'm more of a day trader, I would keep this on the daily and maybe look at the 4-hour market and so on and so forth. But anyway, I digress. So we see that, and the idea is that we think the market might go back up because of that bullish engulfing candle. And sure enough, it does go up significantly over the next week or so. And if I were to put a buy trade right here with my stop loss about right here and my take profit right just before that, right about on the tip of this last one, just before the red line, I would have made a huge profit right there. Okay? And then it would have pulled me out of the trade and I'd be ready to look for the next trade. But that's not the kind of bars I look for. I look for these right here. You see, if I can zoom in, this right here is a pin bar. Let me circle it if I can. I should have, let's see. Here we go. There we go. I know that's kind of unnecessary, but this right here is a pin bar. It's kind of hard to see. You see how there's like this long wick, this long pin? It's the wick of the candle, and then you have a tiny little body and then a tiny little tail right here. That means that price went up and then shot back down before closing for the day. That means people did not like that price. So they brought it back down. And it kind of went up again and went down. And it doesn't mean that the price isn't going to go up again. It just means that at that time, it just means that sentiment might have changed. We'll say that. But it did go down. Now, it came back up, and in that case, I probably would have lost a trade, which is fine. You are going to lose trades. It's a lot more complicated than how I'm saying it right now, but just trying to really quickly go through things, and it's kind of difficult because of how complicated this can be. But knowing you, I should be able to explain this in a way that it's not really that difficult. It really is just ups and downs. That really is all it is. All you're trying to do is find patterns, and you can learn from other people like myself or other professional traders of what their strategy is and just try to master that. And then after a while, when you feel comfortable, kind of tweak it to your own liking, because there is no one silver bullet to trading. You just kind of get a feel for it and learn the market, immerse yourself in the market, and sort of just be in it every day. And eventually your mind will sort of adjust to how things are, and you'll start to notice the patterns. You will just start to notice the patterns. And this is one that I've noticed, is that these pin bars will reject support, or this is resistance, but they also reject support, like this red line down here. And when you get these pin bars, a lot of times the market will shoot down, and it does. So when you get in a trade, all of a sudden you're in the positive by like a lot. And it happens a lot. It happens more than 50%. And that's what you're trying to aim for. You're trying to aim for something that's more than 50% profit by just a little bit. A 50% success rate in trading. Now, technically, the way I trade, because my risk to reward ratio is so low and strict, I could actually lose more trades than I win, and I would still come out with a capital profit. I just think that makes more sense to me, to make my risk to reward very, very strict. The only downside is that I can be taken out of trades by my stop loss much more easily than, say, someone who has a much more liberal stop loss that's kind of up a bit more. If I put my trade right here thinking the market's going to go down, and put my stop loss way up here, what that means is, like, if the market comes way up here, it'll pull me out. That's a more liberal sort of, like, stop loss, and then your risk to reward is going to be kind of ridiculous, and you're going to lose a lot more money that way. But it has the possibility of maybe not hitting your stop loss and coming all the way back down to hit your take profit. But anyways, so this is basically it. Gosh, there's so much more. Oh, I do want to show you a nifty little thing. If you come to, if you make a thing on here and you start sort of practice trading, like I said, you're trading fake money. It's not real money until you actually feel comfortable trading. Then you can trade real money and actually get in the market. But until then, it's better to just trade fake money and practice. But until then, basically, or what I was going to show you was a cool little feature this thing has. Ideas. Where's my ideas here? Okay, my ideas that I published. So you go to your site. Well, that's an old picture of me. I have it shows your reputation and views and all that stuff. And you post these ideas. Like, this is one I really liked. The Euro US dollar. I believed, based on this channel that I saw, it was a really huge drop. I mean, this is, every one of these represents, let's see, this is the weekly. Every one of these bars represents 1 week. So if you can imagine, it was about April 7th, I think that's, yes. So about April 7th of 2014 all the way down to January 19th of 2015. So almost a whole year. And that's 3,500 pips. I mean, that is insane. And then the market consolidated in a channel, sort of like an upward channel. And it also could be like a flag, like an upside down flag. Some people use it that way. They'll have this yellow stick and they'll have this as like the flag. It won't be stretched out like mine is. It'll just kind of be it'll look like a flag. I kind of like mine better because it sort of can, like, if it runs into things up here, then I can still see it. But anyway, my idea was that the market's going to make another $3,500 pip drop. As it says here, the Euro US dollar has been recently trying to retrace after a massive 3,500 pip drop from May of 2014, March, April, May. I guess I measured it differently. During this retracement, a nice flag channel was created and then broken to the downside. Most recently, the bottom of the channel has been retested, and it looks like the Euro US dollar is ready for the repeat of history and one of the greatest free falls in a while. The measured objective leaves our target at 0.8225. Now, this little play button loads all the new, well, it doesn't, not all the new bars, but it loads quite a few of them, and it shows you where it's been. So my projection wasn't entirely correct. And that's just the way it's going to be sometimes. A lot of times, if you go and view other people's ideas, a lot of them will be incorrect, or a lot of them will be correct, and it just depends, because the market's not going to be predictable. But you can get a general idea sometimes about what the market might do. In this case, it really did continue to respect this trend line. So it wasn't in vain to measure this the way I did, because it came back up and made a beautiful, I can't even zoom in, but there's a beautiful pin bar right there, and it made a huge drop over the course of many, many weeks. It didn't go obviously all the way down to my projected target, but I still could have benefited a lot from the idea of a bearish market. So anyways, so another idea, I'll just show you one more. Oh, I think this is wrong. Let's go here. Okay, so let's see, another one that I really liked. Bullish for, let's see, waiting for close. This was long, 240. That's the daily. Let's see, this is, okay, so we have this weekly, daily, let's see. The head and shoulders. Okay, we'll go up to this one. I don't quite remember this one very well, but my projection was this wedge. It was going to break up and then kind of retrace and then go up here. That was kind of a speculative thing that I think I was just not putting all of the situations or all of the contingencies in play here. But I don't remember if it quite played out the way I thought it was going to, but we're going to see. Hold on. Oh, dear God. Oh, it actually did. I mean, at least it did break above the wedge and then come back to retrace on it. It even went up and retraced again, but then consolidated forever. And that is a real bummer right there. Well, I mean, for me, for the market, that's actually pretty good. That means price didn't really do much within the many weeks that we had here. It's the Australian dollar versus the Swiss franc. But anyway, so I hope this was helpful. If you have any questions, I love answering questions about Forex. Oh, I guess I should answer about money. So when you start with a capital, this is something everyone asks me when I introduce them to Forex. So when you start with a capital, I'm sure you know what capital means. When you start with a certain amount of capital, you obviously you're going to wonder how much you can make with the money. The idea is to not really focus on money at first. The idea is to focus on how many wins you can get, how many trades you can get, and learn the market. Just kind of learn the market. Eventually you'll start to get a better idea of what is possible. So for example, the guy I used to work with as a security guard at let me see if I'm still recording. Yeah. The guy I used to work with at a factory as a security guard, well, he was only making a couple hundred every couple weeks. I mean, over a course of time, he was making very little money, and he had a beat down car and everything. That was in Tulsa, Oklahoma. And a few years later, I moved back to Tennessee, and I hadn't talked to him in a while. And he emails me, and it's been about 4 or 5 years when he had first contacted me, and he had at that time was making, when he contacted me, he was making about 10 grand a day. But he also has, but I mean, and he didn't even have very much money when we were actually working together. But now obviously he has tons of money. So the possibility for him was really, really good. It just depends on how you do it. It just depends on how fast you learn and how devoted to this you are. It's really cool though. All right, so let me go ahead and stop, and I'll go ahead and put this on YouTube and send it to you. Oh yeah, you're welcome to share this with anyone if you'd like. But I am going to send you the private link, and you can send the link to anyone else if you want to give anyone else an idea of But yeah, all right. I think that's everything.